Hey guys, today I had the privilege of sitting down with one of my all-time favorite people in real estate, Jocelyn Christiansen from Home1st Lending. We talk about everything from interest rates to what we've seen this year, what we expect to see next year, and something that sellers and buyers are taking advantage of right now that you may be able to take advantage of too. So without further ado, let's get right into it. Tell everybody a little bit about yourself and who you are here at Home1st.
Okay, I am Jocelyn Christiansen. I've been a loan originator here with Home1st Lending for over 3 years. I did come from sales, so I've been doing sales for a long time. Originally from Philadelphia, go Eagles.
Hell yeah.
I always got to drop that in when I get a chance. Oh, and I even got my green kicks on today.
Oh, look at you.
Getting into the
Always
spirit.
repping.
Yeah.
I love it. Cool.
But been very passionate about this industry and this business and super excited to be here with you.
This is one of the main things that I always try and focus on is making sure that I am surrounding myself with the people that are specifically really, really good in their design, in this specific field.
Okay.
Because I can't do it all. I can't do
Right.
everything. And especially now that there's so much kind of uncertainty out in the market, so much information that's probably not super accurate. I feel like it's even more of a duty to be able to align ourselves and present the public with the correct information so that they can make the best choice for them.
Yeah, you know what's funny is I say I've been in this industry for 3 years. However, when I really talk about where I come from, Home1st Lending has been around for 18 years, right? So we've been in Central Florida and we have dominated in Florida for the last 18 years. So in reality, I've been doing this for 3 years. However, I have the resources and the teams and everybody behind me of 18 years of experience.
Yeah.
So in 3 years, I've done a lot, right? I've closed over 300 families and it's been a lot of fun and success. But as a company, I come with actually 18 years worth of knowledge and experience and education and products that we can provide.
That's awesome. I had no idea that you guys were that old.
Yeah,
That's crazy.
we're old. We're little
That's
old ladies.
Well, here, not down here.
Yeah, we're just over here.
I wanted to pick your brain a little bit about what are the main things that you're hearing from buyers right now. What are the main pain points that they're dealing with? And what are things that we can address right now, right here, that will help most people that may be sharing the same pain points?
Okay. So I think the biggest pain point, which you know where I'm going to be headed with this one, interest rates, right? The biggest one, right?
The one.
However, this is what I think is the best way to talk about interest rates, right? If I were to ask you what's your interest rate on your car, do you know what your interest rate on your car is?
No idea.
Absolutely not, right? Do you know what the interest rate is on your car? No, but do you know what your monthly payment is?
Yeah.
Yes, because when you go to the car dealership, you told them, I want to buy this car, but I only can afford a monthly payment of $500 a month, right? And that's what you told them. So why do we look at mortgages as something different than that? Why do we care if you had a 3% interest rate or an 8% interest rate? You shouldn't. What you should be caring about is home affordability. Nobody wants to be poor, and you don't have to be poor in a market with 8% interest rates. We are now thankfully dropping back down, right?
Yeah.
We are hopefully reached the peak of the Feds increasing the interest rates, right? So now we're hopefully headed now on the downside. The good news is that we are coming down now. But what it comes down to is it doesn't matter if we were in the 3% or the 8%. What is your financial goal? How much can you afford for a month where you're not going to be house poor? Nobody wants to be house poor. Yeah. You still want to be able to go out and have a coffee with your girlfriend on a Saturday afternoon. You still want to be able to go and have dinner with your family out, right? You want to be able to go to the movies and afford your groceries. Yeah. So ultimately what it really comes down to is housing affordability. So when people are talking about interest rates, and my blood gets a little bit heated because I'm like, why do you care what the interest rate is? What you really care about is what's your monthly payment. Yeah. So ultimately, we need to refocus, redirect, and realize that it doesn't come down to what the interest rate is. Yeah. What it comes down to is affordability. And that's where you work with a loan officer like myself and a realtor like yourself that's going to say, hey, what are your goals? And this is what you need to reach them, right? And this is where you should be looking for houses because this is the goal that you have. 100%. So I would say interest rates is definitely the biggest pain stake right now. With affordability being at the tippy top of that. I also know for Florida, right? We're in a market where everybody wants to live in Florida. I love Florida. I want to be in Florida too, right? Yeah. I love it. So I think your challenge is housing availability right now, right?
The inventory is the number one challenge for sure. Yeah.
So the realtor side is where are the houses that can fit your goals, right? Yep. So you're having the inventory issue. We're having the interest rate, the idea of high interest rate issues. But I think both of them are something that we can overcome because just because you're buying your first home It doesn't need to be your perfect forever home.
Yeah.
Eddie can teach you how you can buy a house and how you can turn that house into a whole lot of equity and then be able to use the equity to purchase your next dream home that you can live in for the rest of your life and have a forever home that you didn't actually have to spend any money on because you got your first house, you grew your equity and flipped it into a dream home, right?
Yeah.
So like inventory availability is an issue that is overcome, that we can overcome. Interest rates is also an issue that we can overcome, right? Affordability, and then programs such as interest rate buy downs, whether it's permanent or temporary. Those are all the things that we want to find out your financial goals and then find out how we can put you in the best position to reach your financial goals.
And that's another thing that I also focus on with a lot of the buyers that I'm talking to right now is making sure that I pair them with someone like you that can actually give them that, hey, step off the ledge, don't listen to Fox and CNN, all these people that literally, like, their business goal is to get attention however they can. So if
they want the clickbait, right?
100%.
How can I say something so crazy that people are going to make it so that everybody wants to see this craziness, right?
The people that were on YouTube back in 2008 are now the mainstream media. That's literally the business practice, which is insane to me, but whatever. I digress. So most of the people that I'm talking to, most of the smart buyers that I'm talking to right now, they know that right now is the best position that they're going to be in to be able to get the house that they want to.
Yeah.
Because just like you said, interest rates and the perception of them is just that. It's a perception of what it could be, but we got to focus on what it actually can be.
I agree.
And it can also be that once interest rates do start to go down, everybody that's been waiting on the sidelines for a whole year and a half, so interest rates went down, because they kept peddling like, hey, interest rates are going to go down. They're going to go down. We saw them at 8.5. So it's like, they didn't really go down. But now we're starting to see that. We actually see them falling back down from the 8s, right?
We do. Yeah. And I think the one thing that you can really focus on right there, and you're bringing up such an amazing topic right now, is we are in a buyer's market. Yeah. We haven't been in a buyer's market for 3 years, right? Yeah. So ultimately, what that means is the difference between a buyer's market and a seller's market is who's in the driver's seat. Yeah. So in this case, when we were in 2000 and 2001, right, that was a seller's market. So that meant I could post my house for $300,000 and I could have 50 offers come in on my house. Yeah. And then the person that I chose was going to pay $50,000 over what my house was worth. It was a bidding war, and it was nasty, and it was not fun, and you were overpaying for what a house was worth. Yeah. Today's market, a house is posted for 300, you're gonna bid for 300, and maybe there's some other offers, but you're gonna get the house for 300. It's gonna appraise for 300, you're only buying something for what it's worth. Yeah. But right now, sellers also might be willing to help you along the way. Yeah. They want to get their home sold. So at this point, you're able to ask for concessions. Eddie's going to be the one that's going to go ahead and say, hey, we were going to buy it at your purchase price, but we want you to click back another 2% to help my buyer get to the closing table because they need a little help. We want to buy down the interest rate. We want to cover the closing cost, right? So this only happens when it's a buyer's market. Yeah. As soon as those interest rates drop, what happens when interest rates drop? House prices go up. Yeah. And right now we're sitting at interest rates are high and house prices are maintaining. Yeah. So the bad news is once rates go down and house prices go up, everybody's also coming to the market to buy. And now we're in another bidding war situation.
With the same inventory.
And guess who's back in the driver's seat? The sellers. The sellers, Yeah, so right now I think it's really important for buyers to take advantage of this. You're never stuck to your mortgage. You're never stuck to this interest rate, right? If 100%. You're interest rate focused, then you're never stuck to it. You're stuck to your house though when you buy it, right? Yeah. So ultimately get your house, get it at the right price, get as much from the sellers as you can out of it. And then let's talk in 6 months and let's refinance you down into those lower interest rates once we get there in this market as we are headed towards that healthy market that we're really looking forward to. 100%,
because that's another beautiful point that you mentioned is being in a healthy market is completely different than what we saw right after the pandemic, like the 2s and the 3s. Which I don't think we're ever going to see that again, right? Like,
I don't think so. Yeah. I mean, you have to think like something catastrophic is going to happen again in the world, right? World War III, there's another like pandemic or something that We don't want that to happen again. Those were really hard times. People lost their jobs, like we lost lives, right? Right? Yeah, exactly. Businesses went under. So like ultimately, was it a good time? No. Were interest rates great? Was it a great time in the housing market? Yes. Was it a great time for the world? Absolutely not, right? It's not healthy to be where we were in 2000 and 2001. What we want is 2018, 2019.
Right.
If you bought a house, okay, so I bought my house in 2019. I have never refinanced my house, and I am very happily sitting at a 3.75% interest rate.
Right.
I never refinanced into the twos, and I don't regret doing it either because I know that I was in a good spot, right? And could I have refinanced? Of course, it was just a choice that we made as a family, right?
Yeah.
But ultimately, I think when we look at what is going to be a healthy market, right? Where are we headed? What does it mean, like interest rates? If you think you're going to get a 1.2 or a low 3, you're wrong.
Yeah.
Reality sets in. High 3s, 4s, and 5s. That's healthy.
Yeah.
That's where we want to be at. And that's what direction we're now headed back into. And I think that's where we should set proper expectations.
100%. Now, one more thing I wanted to mention is sellers. Sellers that are sitting on those 3s and 4% that are wanting to either downsize or upsize, but they don't want to get back into the market because, again, this fear of interest rates. What is one of the main things that you can help them with so that they can understand like it's not all doom and gloom and there's so many different options that they can tap into?
Right. So we have so many different loan programs. So I'm a broker, which means I don't work for the bank. I'm not giving the bank's interest rate. The bank doesn't say, here's the rate you offer your client. Instead, I'm a broker, which means I have 60 lenders. I have 60 investors that I can go out to and more. We have more than 60 probably. But ultimately what I do is I work for your clients, right? I work for the buyer. So I work your file and I represent you. And I say to my lenders, hey, I've got a file and it has this credit score and they want to put this much money down. They're purchasing a single family home. What can you offer them? And then my lenders say, we want to give you this. So I have the ability to shop for you and put you into the best position with your future mortgage because I'm going out and doing all the hard work and shopping for you. That's the difference between the bank and the broker. The bank is the person here's what you get. A broker, no, I'm going to fight to see how I can get you into the best position, right? So I'm going out and doing the shopping for you. The thing is, all these different lenders that I work with offer different loan programs. So we talked about like earlier a little bit, temporary interest rate buy downs or permanent interest rate buy downs. So if someone's like hesitant about selling out of their rate that they're in right now and they want to know what can I do, there's a program out there that we can help you accomplish those goals, right? And it just comes down to what are your financial goals? Is it monthly payment? Is it cash to close? Like what is important to you? Where do you see yourself in 2 years, 3 years, 4 years, 5 years? Okay, let me go find a product that works for you. So I think the biggest difference is your partners, right? You're with the Santos team, a team that has been around in Central Florida for a really long time and also is super established and has an amazing reputation, right? You partner with Home1st Lending. We've been around for 18 years, right? And so ultimately your partnerships make a big difference. You're going to take them to the title companies that are going to make sure that they're closing and having a good time and popping the bottles and champagne, right? What everybody dreams of, closing and getting their keys and having just a really smooth experience. So I do 100%. Think your partnerships matter. Eddie's going to put you in a position where you are going to be covered from top to bottom, that you're not going to have to worry about, well, was my inspector good? Is that true about this report? What did he miss? No, Eddie knows the best inspectors in town. He's going to set you up for success. We're going to work with the lenders to put you into the best loan program possible, right? And we're going to get you to the closing table so you can have that fun closing, like celebration at the end with the title company,
just
right?
Finally get there and just celebrate.
Exactly. So I think those are all the pieces that really make it all come together. Is it hard to be a homeowner? No. Does it take some education? Does it take some preparation? Yes. But is it going to be worth it? Absolutely.
Yes. Tenfold and even more. So how can people reach out to you? How can they get in contact with you and be able to work with you?
Yeah, I would love to work with anybody. If you are obviously partnered with Eddie, tell Eddie, hey, I saw this. I want to talk to Jocelyn. Let me know. I'm with Home1st Lending. You can call me 407-759-7277. We'll put that in there. And then Jocelyn at myhomefirst.com. I'm also on Instagram, Jocelyn Christiansen. Christiansen's a long name to spell, so we'll just have it in like the comments or something.
Syllables.
I don't know why I got this long name, but I do.
It's
but
cool.
Yeah, I would love to work with anybody. And I mean, obviously, you're in great hands when you're with somebody that's as educated as Eddie is, and he's in an industry that he's passionate about. And I think that he's put himself into a position to partner with the top of the best and also make sure that you're in really good hands from start to finish.
I love it. Thank you so much. I appreciate you. I love you so much.
I love working with you.
Let's do this again sometime. Next time that there's there's something crazy going on.
Let's talk about like that good things. Like next time we're like, yo, those 4% interest rates are back. Let's get you a home.
When the Eagles win the Super Bowl.
When the Eagles win the Super Bowl.
All right, cool. Thank you again. You made it to the end of the video. Hope you liked it. And if you learned anything new, make sure to subscribe and like the video. That stuff really helps out the channel. If there's any topic that you'd like us to get into next, make sure to leave that in the comments down below. And if you want to get in contact with either Jocelyn or myself, both of our contact info will be in the description. I'll see you next time. Happy holidays.